Hi everyone, so we move on to Chapter 3, Professionalism, Ethical Codes and the Public Interest. And certainly in my experience of teaching the ACCA SBL exam, the area of ethics and ethical codes is certainly important to us, as is professionalism and indeed public interest. But let's watch out for ethics and indeed questions that present situations that everyday accountants across the world are forced to deal with, in particular reference to dilemmas. So let's kick off with our first area and really talk about the sort of main concept that sort of underpins all of this chapter: public interest. So what do we mean by public interest? Well, we have a good definition here from the Study Hub. We're talking about the collective well-being of the community of people and institutions the professional accountant serves. So broadly speaking, we're saying that professional accountants operate in an environment where there are a number of different stakeholders, suppliers, customers, local community, government, etc., etc. And the bottom line is that included within that, I guess, in a sense, is the general public. So the public interest is very, very important. And indeed, the professional accountant has to ensure that he, and indeed the people around him, act in this interest, broadly speaking, to protect the community, to protect institutions, and indeed to protect other areas. Next area for us is really, a sort of a drill down into problems, perhaps, with that definition. Collective well-being, as we can see here, it may mean different things to different people. It may mean different things to different accountants. And because of that, and because on occasion, individuals, business people, accountants, board members can act in their own interest, this idea of, collective well-being may be interpreted in ways that doesn't really assist the public. As you can see here, I mentioned the fact that, abuse of this area, abuse of the public interest, because people are in a position of power, not least accountants, but other people, for example, politicians. It may well be that they're acting perhaps not in the public interest, but possibly in their own interest. And we only have to look at news stories over the last 5, 10, 20 years to see that, unfortunately, people in a position of power, people with expertise like accountants, lawyers, etc., and indeed board members, on occasion, sometimes they abuse this power, this public interest, and indeed collective well-being becomes sort of secondary, or unfortunately they misinterpret it. Moving on from there, linked into the public interest, if we're suggesting that really professional accountants today have to look out for the public interest, then in one sense they sort of have a responsibility, a little bit like all companies have some form of responsibility to the public, to shareholders, to suppliers, to all stakeholders. So what do we actually mean when we say social responsibility? And indeed, is that different to corporate social responsibility? Let's look at the definition. So what they're suggesting here is individuals in business have a duty to act in the best interests of the environments in which they operate and society as a whole. In other words, they have a duty, broadly speaking, to do the right thing. Remember that responsibility and social responsibility is definitely linked into the area of ethics. So really, it's taking care, it's considering other stakeholders, and indeed, in particular, considering the environment. We have, as individuals, and indeed as businesses, we have a duty to take care and indeed to watch out for the environment and indeed for society. Now, let's link that into the role of professional accountants. What should that mean? What does that mean? And indeed, how are accountants involved in this role of being socially responsible? Well, first area, these are just examples, by the way. Independent auditors, are effectively employed to give an opinion on financial statements. In other words, to say whether or not these financial statements that are prepared, broadly speaking, on behalf of shareholders show a true and fair view. So in essence, I guess what we're talking about is the integrity of financial statements, or the honesty of financial statements. So, this is an example of professional accountants being in that role to guard against individuals, perhaps board members or anyone else who perhaps isn't overly responsible and maybe does things that affect the integrity of financial statements. That's just one example. In addition to that, financial executives, people with financial expertise, whether or not they are ACCA qualified or not, they're tasked with serving in various areas, whether or not that's in government bodies or perhaps in private institutions or perhaps in listed companies. They, because of their expertise, are relied upon in order to really fulfill the role, fulfill that sort of stewardship role, okay, and monitor, this whole area of responsibility, not just for themselves, but for the people connected with them. Another example, internal auditors. What are they supposed to do? Well, they're supposed to really provide a view, provide a check on internal control systems within businesses. What does that mean? Well, any business is made up of a series of internal controls. If you're working at the moment, there will be thousands of internal controls, whether or not that's a lock on the door, a security guard, a password, etc., etc. So really, internal auditors, as accountants in effect, are there to provide assurance as to those checks working and working correctly, really to protect assets, to protect businesses, to protect shareholders. So there's the link to accountants. Now let's move from that sort of broad idea of social responsibility to CSR, corporate social responsibility. Now, what do we mean by that? Well, in essence, what it says is that as businesses, we have a responsibility, business people running businesses, the board of directors, we have a responsibility to really align the business's culture with the stakeholders that it's connected with. We know from our studies of Mendeley that any business is connected with a myriad, a plethora, loads and loads and loads of different stakeholders. And what you can't do as a business or an accountant or as a board member is simply, act in a way that suits you. You can't do that. You must ensure that a business's or an organization's culture is such that it aligns with the needs and the wants of the stakeholders connected with that business. Linked into that, I guess if you're successful, then certainly, the reputation of your business will be better. I mean, reputation is everything, particularly in these days of social media and indeed the speed at which information flows. A business's reputation is everything. And generally speaking, if you look at empirical studies, and indeed if you look at the press, generally speaking, you find that businesses that are broadly pro-CSR, in other words, they have an interest in society, they have an interest in the environment, they have an interest in aligning the culture with the needs and wants of stakeholders. Broadly speaking, they do better, and they have a better reputation, for sure. When we think about what corporate social responsibility means at a very basic level, it really means maximize the positive effect and minimize the negative effect. Okay? Last point here, last area. Certainly, there is always bound to be, I guess, some sort of conflict. It's very, very difficult to keep all of the people happy all of the time. So really what CSR should do is certainly evaluate, monitor the risk, but mitigate the risk of conflict with local communities. Businesses do not need conflict with communities that are around them. Absolutely not. That is not good for business. So that's really, I guess, the third sort of facet. There are other facets of corporate social responsibility which we'll see in many, many different areas of this course. Let's move on from there. Excuse me. I guess we've been talking about accountants, and we've also, I guess, touched on the issue of the board. You know, accountants have a responsibility to push through on responsible actions, and indeed responsible actions on behalf of other stakeholders. But certainly leaders or directors or board members or NEDs, they also have a responsibility. So what do we mean by this concept of responsible leadership? And indeed, why is it becoming a term that's more and more common in recent years? So let's look at it, the rise of responsible leadership. So what we'd see in the first instance is that there's a requirement now, broadly speaking, in society for businesses and indeed for organizations to be good citizens. And this really sort of harks back to the idea that, you know, in essence, a business can be seen as a sort of an individual. You know, an individual in society has rights and responsibilities. So, you know, a business, for example, has a right to operate, has a right to sell its goods or provide its services. But what comes with that is a responsibility to act in the right way. In other words, to be a good citizen, to do the right thing. Okay. Now, why is it that this phrase, good citizen, or indeed responsible leadership, has become more and more prevalent in recent years? Well, you know, there's been several things. You know, look at the press. I've just given you one example. There have been, over recent years, just more and more examples of businesses being totally irresponsible. This is just one example. I'm not picking on Nike. There's thousands of examples of, you know, social and environmental crises. I mean, Body Shop in the UK going back 20 years is another example, you know, and on and on and on. So these things are becoming more reported on and more evident. People are more aware of them. They don't like it. The next area is something that, well, I was just about to say it's sort of outside our control as humans, as people, but probably as not. You know, the environment is becoming more and more challenging. You know, global warming, climate issues, migration, you know, et cetera, et cetera, et cetera. Again, let's look at the press. You know, the business environment becomes more and more difficult. So really, when you think about leaders in businesses, whether or not they're accountants or not, I'm talking about CEOs, CFO, you know, board members, the C-suite. You know, when we see these things happening, you know, they have a responsibility. You know, they have a lot of power. You know, they need to be responsible leaders. Next area for us is really, you know, a shout out, an add-on really to what I've just said. We've seen up top that, you know, certainly financial executives serve in many, many different areas. It's important that they act in the right way, that they act in a responsible way. You know, internal auditors, the same. We saw some examples up top about the power that people, individuals with expertise in finance, expertise in auditing, expertise in tech, the power that they have. That means that they need to be responsible. You know, in terms of the concept, we have a definition here from Waldman and Gavin from 2008. Let's take a look at that. You know, it's an interesting one too. They say, you know, what's at the heart of effective leadership? For that, let's read sort of broadly speaking, responsible leadership is, you know, the idea that if you're not responsible, you're not a leader, and indeed you're not going to be effective as a leadership. So, in other words, in effect, what Waldman and Gavin are saying is that leadership is about being responsible. You know, you can't be good or effective as a leader without being responsible. So, I like that definition. The next area is sort of linking, I guess, into sustainability. In other words, the idea that responsible leaders, if they are 100% responsible, will definitely take sustainable business decisions. Now, what does that mean? Well, that means decisions that really view the long term, decisions that take into consideration all stakeholders, not just profit making. Certainly decisions that don't have the focus of the short term or short-termism, or let's say, for example, my next bonus next month or my next bonus next quarter at their heart. Next key point here is a good little phrase to know for exam questions in this area. Triple bottom line. Triple bottom line: economic, social, and indeed environmental performance. So clearly, economic performance for private and or listed companies, for profit entities, is important. If we have businesses that are making losses on a regular basis, this is not good. This is not good for shareholders, not good for the business, for employees. But that's just one aspect. We should be reporting and conscious of social performance. How are we doing in relation to society? And indeed, on top of that, environmental performance. What's our carbon emissions target? What do we do about waste? How are we affecting the local environment in terms of pollution, etc., etc., etc. Next area for us is just broadly speaking, given what we said up top about the public interest and indeed now about responsible leadership, what are the main themes? Well, again, first things first. This keeps coming up, doesn't it? Ethics and indeed good ethical judgment. And you remember what I said from the off in terms of the SBL exam. Ethics has got to be one of our go-to topics, one of our key topics. I mean, if we get an ethics question and we underperform in it, it's such a shame, because ethics is not a tricky area technically to understand. We'll see later on in this particular mind map that the theory behind ethics, the theory underlying ethics, is very, very straightforward. More of that later. So, the common theme in responsible leadership is good judgment. Remember, ethics at a simple level just means the difference between right and wrong and understanding that difference. Outside of that, linked into responsible leadership certainly is trying to be, a force for good, as opposed to the opposite. Doing good things, doing the right things, being fair. Outside of that, as mentioned up top, certainly long-term view is essential. Short-term, no good, I don't think, for responsibility, for ethical good judgment, etc. Let's look into the future. Let's plan forward. And one final point that I think I guess ties it all together, when we think about areas such as responsibility, ethics, etc., communication is key. Communication with stakeholders, dialogue, with stakeholders. Let's keep in touch. Let's get people's views. The reverse is also true. Often there's an association, I think, with, poor judgment or poor ethical decisions or, an anti-CSR policy and a lack of communication. Communication is key. We see the same thing, don't we, within corporate governance. We see communication being fundamental, really, to good corporate governance. Okay, let's move on from here into public value. Now, value is a sort of a term, a word that has become more and more used and more popular. Both in its own right, on a standalone basis, but also linked with public value that I'll deal with in a moment. When we think about things like integrated reporting is, in one sense, hinged or sits on the idea of value, doesn't it? In other words, we need to report more about non-financial areas across the 6 capitals. How are we going to report? Well, let's report in relation to the value that we create, not just the profit, not just the financial capital. An example might be, let's say, in relation to human capital. on integrated reporting. Let's report on how much training we've done and how we've really added to the skills of our employees. That's creating value. It's not profit. That's actually a cost. So in terms of public value, what do we mean? Well, what do you contribute to society? Is your business simply geared towards making a profit for shareholders? Or do you actually create some sort of value in some way for society as a whole? And this little diagram sort of really sums it up in one way in terms of a loop. Because what this diagram sort of says is, there's no starting point, but I'm going to take this sort of starting point as sort of, authorizing environment. Now, what I mean by that is a business sets up, it starts to operate, to sell, for example, widgets. Okay, this environment or the business complies with law, incorporates, sets up bank accounts, etc., employs staff, comes up with a strategic plan, and then obviously has some sort of operating or operational capability or capacity. Yeah. Now, if this is done in the right way, then in essence, public value outcomes will just drop out. In other words, businesses acting responsibly will automatically really create some sort of public value. If they have CSR and good ethical decision-making at the forefront of their minds when they devise strategy, when they operate, when they make their widgets, then public value outcomes will just be automatic. So really what we're saying here with this diagram is, you don't have to be a brain scientist and you don't have to reinvent the wheel as a business. You just need to do the simple things well. And then public value will probably come along in one way, shape, or the other. In terms of reporting on public value, we like to have public value. We like to create value for sure. We want to create a good, positive impact upon society. How about reporting on it? How do we report as a business on how we are creating value? Because that sounds like a good idea. Let's not keep it to ourselves. There are several options, or if you will, models that we could use. The triple bottom line approach, the idea of sort of economic, social, and indeed environmental. Let's report on emissions. Let's report on social aspects of our business and the impact, let's say, on the local community. Very simple approach and very similar to the PPP. People, planet, profits. In essence, that's the same, really, isn't it, as economic, social, environmental. So 3BL and PPP, similar. Integrated reporting, as I mentioned up top, again, quite similar, because integrated reporting isn't just about providing more information across the 6 capitals to shareholders. Integrated reporting is about creating or providing information about how you create value across all capitals. How you interact with the environment in terms of social and relationships, how you use intellectual IP, how you train your staff, human, natural, how you use natural resources. So, these areas here are several key models, if you will, that would facilitate the provision of information in relation to how you operate, how you add value or create value for society. Let's look at our next area here. In terms of issues, so we've dealt with the theory. Does that mean that everything is great? Does that mean that all we need to do as businesses is to act ethically, to think of corporate social responsibility as a priority, and indeed to make sure that we have a very, very positive impact on society and create public value? Yes, it does. The problem is that, in real life, things are always a little bit tricky in certain areas. So what are the issues given what we've set up top? Well, here's an interesting one and something that you've probably thought about. The environment that we currently operate in. The IFAC in 2020, so around about the time of the pandemic, issued a press release and several statements basically saying that, we need to be careful because in their experience, where there are crises, as there were, the pandemic as an example, and that's just one example, generally speaking, that serves as an opportunity for people to do things incorrectly, to people to prioritize themselves, let's say their self-interest. So in essence, what this point is effectively saying is, yes, these things are important, ethics, CSR, public interest, responsible leadership. But you know what? Based on history, we need to be careful because the environment as it stands now, given the effect of the pandemic on everyone, is ripe for financial malfeasance. In terms of profit before ethics, again, let's wheel out some examples of perhaps situations where it's extremely clear that individuals running businesses, board members, shareholders, everyone, really don't have public interest or indeed the creation of public value for society at the forefront of their minds. Now, these are just a few examples. How many times do we see reference in the press to schemes, tax avoidance schemes, where unscrupulous expert tax advisors are creating schemes to help wealthy businesses, wealthy individuals to pay no tax, to avoid tax. Now, note, tax avoidance, strictly speaking, is legal. Tax evasion is illegal. So when we think about aggressive tax avoidance schemes, what we're saying is, where is the line between, the idea of acting fairly and indeed acting, within the law and acting outside of that? Is it right that you should spend millions and millions of dollars to try to avoid tax, or indeed to assist individuals or indeed businesses to avoid tax? Is it a good idea? Well, that's your decision. Here's another example, collapses and indeed scandals. BHS in 2016, and if you look into the detail of that particular scandal, you'll see that certainly in terms of solid ethical business practice and indeed responsibility, certainly wasn't at the forefront of some of the individuals who were involved in that particular collapse. Third area, again, this is just an example. I'm not picking on banks or picking on HSBC, but HSBC were involved in one of the biggest bank frauds ever that you could imagine. I believe it was in relation to subprime mortgages. 1.5 billion as a penalty for fraud by a bank. That's a lot of money, but it's not the money I'm concerned about. Is, what were they thinking? Were they thinking ethically? Did they have public value at the forefront of their minds? I doubt it. So a lot of examples of things going pear-shaped. In terms of ethics itself and indeed codes, I think we know what ethics is because we've discussed it. At a simple level, ethics just means the difference between right and wrong. So how does this impact upon the profession? Well, it does so, broadly speaking, let me just go back a bit. It does so generally with most professional bodies and indeed most professions in relation to codes or the setting of codes. So what do we mean by an ethical code? Standards, rules, guidelines, and values that provide some sort of compass, that guide conduct, in a profession, organization of its employees. So really, if you will, it's a sort of, in one sense, a set of principles that we can look to guide our behavior. And indeed, in terms of guiding our behavior. These principles are not complex. We're going to look through the ACCA code just now in a minute, but they're not complex. It's not difficult to do, and yet, as we saw up top, in terms of examples of poor ethical judgment, bad ethical behavior, bad decisions, they are many and varied and constantly being reported upon. So let's take a look at the ACCA ethical code and see what we think of it. Now, note that this code is very, very similar to many codes in other professional bodies. These areas are certainly a well-trodden path. First things first, integrity. Now, integrity simply means, when I think about the word or see that in a question, I just think honesty. People, individuals, and board members, ACCA members in particular, need to be honest. They need to be straightforward and honest at all times. Otherwise, their opinions, their work, can it be relied upon? Probably not. The next area, again, very important, objectivity. Now, the word that I think of when I see objectivity in an SBL question is bias. Okay? In other words, in one sense, avoiding situations where you allow your judgment, your professional or business judgment, to be impacted upon for one reason or another through bias. Again, linked into integrity, if we're seen as a profession to be a group of expert individuals who can on occasion be biased in their viewpoints or biased in their work, this is not good. This undermines the profession. Next one, professional competence and due care. Now, there's quite a few areas to this, so let me slow down a little bit. The first side is really, your knowledge and skill, maintaining it to make sure that you're competent. In other words, if you don't, for example, keep up to date with CPD, continuing professional development, then the idea that you will be able to provide a professional service each year on an ongoing basis is nonsense. You need to be competent. You're required to be competent. You're expected to be competent. Next part of it is certainly to act diligently and in accordance with technical and professional standards. So really, for this side, I always think that professional competence and due care is sort of double-sided. The first side is knowledge and skill competency. The second side is really, making sure that you keep up with standards. So, for example, you would breach this particular aspect of the ethical code, the ACCA's code, by, let's say, taking on work that really you're not qualified to do, and indeed that you couldn't produce at a high enough technical or professional standard. So let's remember that professional competence and due care is sort of twofold, okay? So that's the first three, okay? Next one here, confidentiality. Now, that's an obvious one. It's a gimme in one way. You need to keep quiet. You can't be sharing information in relation to a client or perhaps your employer down at the local golf club. Okay? This is not a good idea. Do not be disclosing information without proper authority, and note that there can be authority where this area of confidentiality can be breached, and it's where generally there's a sort of a legal order or a court order or a legal right to do so. Okay, so confidentiality isn't bulletproof. You don't have to be confidential to a fault. If there is a legal requirement, then you can breach this particular area of the code. Okay. Outside of that, in terms of general disclosure, we've discussed it, but also don't be sharing information or releasing information for your own benefit, for some sort of personal advantage. For example, selling information, insider dealing, etc., etc. The last one is professional behavior. Now, what we mean by that is, I guess, what it says on the tin. As a member, let's say, of the ACCA, you're certainly required to behave correctly. And what you shouldn't do is bring the profession into a position of what you might call ill repute or disrepute. So don't act in a way that, as it says here, may discredit the profession. Don't go down to your golf club or the local bar, get drunk and have a fight, okay? This is not a good idea. Linked into that, certainly compliance. You need to abide by the law. You need to abide by regulations, yeah? This is a basic requirement of a professionally qualified accountant. Okay, so there's the five main areas. Note that you can remember the ethical code for ACCA with the mnemonic copy, COPPI. COPPI, easy to remember. Now, one final point in relation to SBL style questions that we'll see. If ethics is in play, it's highly likely that the examiner, or indeed your marker, will expect you at least to mention the code. And it may well be, subject to the type of the question, that many elements of the code will be relevant. Not always, but very often. I rarely would see a model ethics answer where the code isn't in there in some way, shape, or form. But just be careful with this area. What I see students do a lot is, as soon as they see ethics or ethical in the requirement, they just write all that they know about the code. We need to apply our knowledge. It's highly unlikely in a given question or a given scenario that all of the elements of the code will be relevant. Very, very impossible nearly. Probably a few of them. Now, in my experience of dealing with ethics questions at SBL, and indeed other case study exams for other professional bodies, what I would say is the more important ones, the ones that happen more often, are integrity and objectivity, absolutely. Possibly followed by competence and professional behavior. Confidentiality is much less common, but integrity and objectivity, very, very common. Okay? More of that later. We're following through. So we've talked a little bit about the code. Let's take a look at what we have here. So we've said the code is or should be applied in ethical situations. For example, a dilemma. Okay. Now, is it law? Are you breaking the law if you breach the ACCA's ethical code? No, you're not, because it's not legislation. Note, a little bit like corporate governance, when we talk about rules-based versus principles-based, the ethical code is a principles-based approach. In other words, in one sense, it's a set of guidelines. It's up to you to interpret it, okay? Next area for us is, an example of a corporate code. We've said that the ACCA as a profession has a 5-part ethical code, but certainly most companies will have their own codes on top of that. And what I've done is I've just stripped out from the Study Hub something relating to Microsoft. So let's have a read of this. So this is the in-house, I guess, standards of business conduct for Microsoft. And it says, and this is quoted, by the way. It says, the code has been built around a single value, trust. Okay, trust is viewed as an underpinning element in all Microsoft operations, okay? And indeed, the code includes a process that can help just make difficult decisions. When they say difficult decisions, they're talking about decisions that may involve some sort of dilemma. So indeed, in summary here, certainly businesses, particularly professional accountants, will be aware of their professional ethical code. On top of that, many, many businesses will have their own. Okay, let's look at the next area here. And sorry, I'll just go back a little bit. We've talked about the code. We've talked about public interest. We've talked about situations that unfortunately accountants, board members, employees will come into contact with that make things difficult for them in terms of what to do, decision making, etc. And one important area is certainly conflicts, or indeed conflicts of interest. You'll remember that within the code, the second area was objectivity. And what we talked about there is bias, okay? And very often where there's a problem in terms of bias, there's some sort of conflict of interest. Now, so what do we mean by conflict of interest? So we're talking about a situation, a scenario, which has the potential to undermine a person's impartiality, in effect, possibly make them act in a biased way because of the possibility of divergence between the self-interest and indeed a professional and public interest. So really what we're saying is this conflict is occurring because their own interest, i.e. their self-interest, is coming into play in relation to or versus, let's say, the public interest. Okay? That's a conflict for them. So this is really putting them in a position where they have to make a decision, maybe a choice. Do I choose my own self-interest or do I choose the public interest? We know what the right thing to do is, but as we've seen from so many different examples, both within this mind map and indeed every day in the press, sometimes people make the wrong choice. Now, in terms of threats in this area, what do we mean by a threat? Well, we've given a number of different examples. In terms of the definition up top, it said a situation or a scenario. So really what we're talking about there is really, scenarios that involve something outside of you, let's say, as the professional, threatening you, threatening your judgment, threatening your decision making. So what are the causes of these ethical threats? Well, I've only picked out a few here from the hub. For example, cultural differences. This can happen. If we're working with people from different cultures, if we're working with businesses that have a different organizational culture, that can cause a threat because people do things in different ways. People in one country may think in one way, people in another country think another way. So that, unfortunately, is a reality, particularly in today's world of extensive globalization and multinational operations, etc. Next possible area is really, the top, as it were. If you have a situation where you have poor leadership or weak leaders, more often than not, that can create openings for unscrupulous individuals who perhaps want to threaten other people or want to abuse other people or who are plainly self-interested in. What we need always, as we said up top when we talked about responsible leadership, we need guidance. We need tough leaders who are aware of the difference between right and wrong and are prepared to put that in writing. They have an ethical code for the company. They enforce these things, and they act when people stray over the line. We need good, strong leadership. Some examples of these threats. Certainly misuse of power, extremely common. Gifts, bribes, or hospitality. How many times do we see that? Certainly in relation to businesses, but also in relation to governments. Not complying with regulations. Note that would also be, depending upon the regulation, that would also be seen as illegal, possibly a criminal offence, e.g. fraud. And then linked into that, I guess, misleading marketing or, just taking advantage of vulnerable consumers. So these are just some examples that I've taken from the study hub, but ethical threats are all around us, unfortunately, because self-interested individuals or individuals that don't care about public interest, don't care about responsibility, don't care about the difference between, they are also all around us. So we're always going to have ethical threats. We'll never eliminate ethical threats either from society or indeed from businesses. In terms of dealing with threats, let's just say that we have a question within the SBL exam that presents, a difficult situation, a conflict, an ethical conflict, an ethical dilemma. What do? Well, the ACCA provide us with guidance, as do one or two other bodies. So what's the deal? Well, what the ACCA suggests, and this is important here, because these 6 points could form the basis of an answer if we get the right style of question. So I'm talking about a question, broadly speaking, that asked you to advise the board or advise the CEO in relation to the resolution of the said conflict or the said ethical dilemma. And, in these sorts of areas where you get lists of things, so this is, in effect, a list of steps, broadly speaking, that the ACCA suggests you should take. I certainly think that more often than not, when you get these lists of steps or action points, rather than just, memorizing them and really not understanding, try to really understand the essence of why these are the steps. What I mean by that is that if you understand the essence of why these things are important, in other words, do this first, do this second, then remembering the steps is so much more easier because you have a deeper understanding. And I don't subscribe that you memorizing right now these 6 steps. I don't. I want to take you through why are these the steps. And in that way, if we face a question like this, I think that the answers or this structure, this set of steps will come back easier to you. So we got a conflict. What do the ACCA say? Get the facts. Get the relevant facts. Now, this is important because what the ACCA and indeed other professional bodies don't like in relation to areas such as ethical conflict, they don't like knee-jerk reactions. Okay, just because your CEO walks into your office if you're working and says, the CFO has done something unethical, has definitely taken money from the company, and I think he might well be en route to the airport. Okay, first things first, we need to establish the facts. Has he taken money? How does the CEO know? How much money? Where's the proof? We need to know first and foremost, and this is across the board with any ethical situation. Let's establish the facts first, and indeed let's evidence the facts. The next area is ethical issues, and then what we're saying there is, okay, have you got the facts? Yeah, I've got all the facts. Okay, what you're saying there is this an ethical issue? In other words, has something been done that technically breaches the ethical code or ethical guidelines? It may not be. This may not be unethical. This may just be your viewpoint, Mr. or Mrs. CEO. You might think this is completely unethical, but in fact it's not. So what we need to know is, what are the ethical issues? And in fact, are there any ethical issues? You just may not like the person. They haven't stolen anything, and you just go around spreading rumors. Okay? Maybe this is something that's a little bit dodgy behavior, but it's not ethically completely 100% unsound. Okay? So that's the second point. The third key point is, fundamental principles. In other words, we're talking there not just about ethics, but indeed over and above that, about, legality. Okay, are we breaching the code? Is this illegal? In what sense? What law? What are the fundamental principles, either in law or indeed in ethics, that have been breached here? The fourth key point is establish internal procedures. Okay, now we talked a moment ago about corporate codes of conduct, i.e. codes within organizations for ethics, an ethical code that is internal. Now, there must be in all companies some sort of procedure, particularly well-established SMEs, listed entities, internal procedures for dealing with problems that are ethical problems. So go to them. It may be in a manual, it may be online, it's somewhere. Go and find it. Let's follow normal, formal, internal procedures. Okay? Once we've done 1 to 4, we're now in a reasonably good position. We got all the facts, okay? We know that this guy has definitely taken money in some way, shape or form. It's on camera and there's evidence in the bank account. We also know that ethically, this is unsound. In addition to that, it's illegal. This is theft. We are going to be calling the police in due course, okay, once we've established the rest of the courses of action that we're going to take. We've now looked at internal procedures and we see that steps 1, 2, 3, and 4 need to be taken. Okay, we need to contact the police, we need to contact our lawyer, etc., etc. So number 5 is courses of action, okay? We need to come up with possibilities. You know, there are a number of different ways to deal with a situation like this. You know, we have an option to call the police, or maybe we have an option not to call the police. You know, this guy has been with us for 35 years. Let's just say we're going to deal with this internally. So when I say courses of action and their consequences, we know if we call the police, this guy's getting arrested. You know, he has a family, you know, he's been down in the dumps, you know, he has a little bit of an issue. Let's take care here. Next area is internal and external sources. In essence, what we're saying there is really there may well be, let's say, a professional body or an other that we could consult in this regard, in this respect. In other words, let's not do anything that is sort of seen again as per point number 1. Let's not do anything that could be seen as maybe knee-jerk. Yeah? What we don't want to do is to knee-jerk. We've looked at the option presented by the ACCA in relation to conflict resolution, or if you will, the resolution of an ethical problem, an ethical dilemma. What would be the other options for us? Just a little bit of detail here. You'll see from the study hub that AAA, or the American Association of Accounting, provides a 7-step approach. And that approach is actually very, very similar to the ACCA approach. In addition to that, you know, Tucker provides a slightly different approach, really based on questions. And again, I'd refer you to the study hub in that respect. So going back to the beginning here in terms of this approach to dealing with conflicts and indeed action steps, in essence what we're saying here is in a typical SBL question, you may be asked something along the lines of advise the board, advise the CEO in relation to how to deal with the above scenario. And what you'd be doing based on the scenario that you see is wheeling out one or other of these options. I like, as I've said at the off, really the ACCA's approach and indeed AAA, because broadly speaking, they're based on common sense. Let's get the facts, let's investigate carefully, let's not be knee-jerk, let's look internally, externally, etc. Let's come up with courses of action and let's implement, review and control. Okay? Let's move on now to the next area of categories of ethical threats. And really what we're talking about here is sort of specific buzzwords, if you will. In other words, specific buzzwords in relation to some of the examples I gave above. So, you know, self-interest threat. Really what we're talking about there is where an individual, let's say an ACCA qualified accountant or indeed a board member, is in a position where really there's the possibility for some financial gain, some gain for that person if they are self-interest. So rather than thinking about the scenario ahead of them, or, you know, rather than thinking about an ethical approach to dealing what's in front of them, they are self-interested. Okay, so that's one example. You know, we might be in a situation, let's say, for example, there where, you know, if they make a decision going towards X, you know, they'll make some sort of financial gain, whereas going towards Y, let's say, would be the best route for the interest of the company, shareholders, etc. What about the next area, self-review? Quite straightforward, really. All that we're talking about here is that the individual has been tasked with reviewing something or giving an opinion on something where the work involved, they've been involved with. Yeah? In other words, they've done some work and they've been asked to review their own work and give an opinion. We really can't have a situation where an individual, particularly not an ACCA qualified accountant, is put in that position. So one has to be careful. One has to really walk away from that type of engagement, because there's a danger that one simply says, well, okay, everything's fine because I did it. A typical scenario might be, let's say, an auditor, asked to review their own work. What is likely to be the opinion that they give. Next one, advocacy. This is slightly different. And really what we're talking about here is where an individual is put in a position where they're asked to promote something. Let's say something to do with a client, product launch, etc., where their judgment could be impinged upon because the outcome of, let's say, their opinion is quite crucial to the client. Really, ACCA qualified or otherwise, one shouldn't put ourselves in a position where we're having to advocate or indeed promote for a particular position, let's say for a client, where there's a possible gain for us in relation to that opinion. Familiarity, again, does what it says in the tin. We're talking about relationships here. We're talking about relationships perhaps between, let's say, a set of external auditors and indeed a company. Let's say that there's a husband and wife, and the wife is head of the audit team, and the husband is the CEO. There is familiarity there. There's a danger that that engagement won't be undertaken perhaps in the right way. There must be an element of conflict where there is familiarity. And again, if an ACCA qualified accountant or someone else finds themselves in a position of familiarity, they should get themselves out of that position. They should avoid it in every way. Last area here is intimidation, and this is probably maybe one of the worst, because really what we're talking about here is not so much the individual advocating or perhaps being self-interested or in a position of self-review. They're actually being intimidated by someone else. Let's just say that it's a line manager who's submitted an expenses claim, and there's a variety of private elements in there, and this line manager tries to perhaps put pressure on an accounts clerk or assistant accountant to pass those expenses. And indeed, that accounts clerk or the assistant accountant knows that this person is in a position of higher authority than them, and this person possibly has the power to impact upon their job, their career, etc., etc. So that is an intimidation threat. And indeed, in that sort of situation, one has to be careful. One has to really take advice. One has to perhaps look above the line manager, look elsewhere in the organization, and really, get someone else involved, get someone else to assist. Okay? So those are sort of ethical threat characteristics, which, broadly speaking, sort of piggyback on some of the tricky areas that we've already discussed in this particular video, areas that and situations and scenarios that individuals can find themselves in. What about safeguards? In other words, given what we've said, given the problems that we can face as accountants or just as professionals in modern day business, what sort of safeguards can we employ? In other words, what can we do when we're in this sort of position where our ethical compass, our morals are being threatened by another person or maybe just by the situation? So, if we think that a threat is, unacceptable, there's a couple of things that we can do. The first thing is to try to eliminate the circumstances. Don't just accept the situation. Let's do something about it. Let's change the situation. That may be that may involve speaking to a superior. That may involve taking advice from the ACCA, taking advice from a lawyer, etc., etc. So let's try and work on the circumstances that have created that threat. In terms of other possible safeguards, a couple of options here. Let's just say that we're in a position where there is a self-review threat. You remember what I said up top. Let's say that I am asked to review my own work. Well, let's get someone else to review it. Let's get someone else involved, and I can step away from that particular engagement in some way, shape, or form. Outside of that, similarly, perhaps maybe there's a familiarity threat in some way, shape or form. Let's involve other individuals. Let's say that it's my wife who's involved and there's some sort of threat in relation to this engagement. Let's say that she is the CEO of a supplier company. Let's put some sort of barrier or indeed set of different individuals in play in line with this particular threat. Okay, so these are just ideas. Remember, common sense prevails at all times. Last straw, I guess, or the final thing that one could do. Let's say that it's an accountant in public practice, and there is a significant ethical threat, whether or not it's familiarity or intimidation or whatever it is walk away. Decline the engagement. Decline the specific professional activity. End it. End of story. Get out of there. Okay? That's always a possibility, regardless of the situation. So those are the sort of safeguards, if you will. Let's move into now some definitions in relation to other areas that we really haven't sort of discussed in any detail yet, but they're certainly linked into the overall big picture of public interest, certainly responsibility, ethics, etc. The first area is fraud. What do we mean by fraud? Well, it's certainly an intentional act, okay, by individuals using deception in some way to attain some sort of advantage, usually a financial advantage of some kind. Okay, so that's fraud. Now, let's remember that broadly speaking, across most jurisdictions, fraud is a criminal offence, an offence that could end up the perpetrator in prison. Next area, bribery. Okay, so we're talking about offering, giving, receiving, or soliciting some sort of value to influence the actions of, let's say, an official or another person in charge of some sort of duty, a public or legal duty. So really giving something to influence an individual to do something that's just not the right thing to do. Also illegal in most jurisdictions. Linked into that now, corruption. Okay, a little bit more detail here in relation to corruption. Now, what we're talking about in the first instance is really the abuse of entrusted power for private gain. We're talking about someone in a position of power who abuses that for their own interest. We're not just talking about anybody. This person has power in some way, shape, or form, possibly linked into their role, their position, their job. Okay? Now, in terms of this abuse of power, as you can see here, there's really two sides to it. Now, let's remember, everybody, there's quite a lot of detail here. Would we need to be wheeling this out in a question? Possibly, but it's best to get some real depth in relation to our knowledge. I think that makes answering questions so much easier. So don't be concerned if you think, God, we've got to learn all these definitions. Not necessarily. Let's just get a feel for the topic and back that up by doing questions. So two sides to it, really. According to the rule, or indeed against the rule. So remember, we're talking about one of three areas here. Corruption, okay? Basically, someone has power, they abuse it to get a gain. So two sides. What do we mean by according to the rule? So what we mean is that really these bribes or perhaps funds are paid to receive treatment for something that the recipient is required to do by law. So a good example, again, I've taken this directly from the study. We have a customs official, has been received something, a bribe, funds, etc., to quickly process, let's say, import-export of goods. Okay, so in essence, they're sort of doing their job, according to the rule, but they've been paid to do it a little bit more quickly than they should. They've been asked to prioritize this particular transaction, or indeed this passing, if you will, through this process. So that is according to the rule. That's maybe not quite as bad as perhaps against the rule. Both are corruption, though, mind. So what do we mean by against the rule? Okay, so in this case, again, a bribe paid to the recipient, in relation to doing something that is actually prohibited. So the rule is the rule. The bottom line is XYZ, let's say, can't be imported or whatever. Okay, but what's happening here is that someone is being paid to go against the rules. So in this case, we're talking about, let's say, customs official clearing for import-export, something that is prohibited. It should not be passed through the system. It should not be passed through the process. Okay, so let's just remember here, three main areas: fraud, bribery, and corruption, with corruption having a little bit more depth, either according to the rule or indeed against the rule. Let's move on from there and look at sort of impact. What are the impacts of these areas? How does fraud or bribery or indeed corruption, how does it affect us? How does it affect society, the environment? Now, again, I've just taken a few examples here, but certainly where we have fraud, bribery, corruption, it certainly distorts competition because people are having some sort of illegal advantage in some way, shape, or form over people and businesses and entities that aren't committing fraud, that aren't bribing people, that aren't following through with corrupt business practices. In addition to that, certainly a reduction in government revenue, in effect taxes, etc., which affects society and affects the government's coffers, the government's purse. Okay. Next area really is civil society. If we are simply to allow people willy-nilly or not guard against fraud, bribery, and corruption, what's going to happen to our society? We're ending up heading in a downward spiral. So this is why governments across the world, and indeed all of us, should guard against these areas. These areas have a significant impact in a multitude of different ways. As mentioned, I've just picked up 3 areas from the Study Hub. There are many, many more outside of that. Let's move on to our next area here in terms of, okay, what can be done? What are the practices that, let's say, an organization should consider to combat these areas? We know from just a cursory look at the press that these areas are very, very common. There's a story about fraud or bribery or corruption or someone doing something in these areas on a regular basis. So what can we do? Okay, several options for organizations. The first one, let me explain, proportionality. Well, that really sort of promotes the idea that really, the punishment should fit the crime. And indeed, everyone, fraudsters, people that commit corruption, people that accept or give bribes, should know that, for every action, there's an equal and opposite reaction. We're saying proportionality in the sense that, if you're going to commit a serious fraud, you should get a serious punishment. Okay? That's an understanding that all parties, all stakeholders should have. Second one, top-level commitment. Like everything else, certainly within an organization, we need to have the commitment of the C-suite, of the board, to areas such as the prevention of fraud, the prevention of corruption, etc. If we don't, then that's a bit of a problem, because at the end of the day, the C-suite, the top level of any company sets the vibe, sets the culture in relation to attitude towards these areas. That might be in the form of training seminars, it could be in the form of manuals, it could be in the form of seminars, etc., etc. Okay? In terms of number 3, risk assessment, clearly it's important for organizations in all industries, and some more than others, to assess the degree of risk in these areas. Some industries, fraud will be much more prevalent than others. Perhaps industries associated with cash or cash-based businesses, it's a lot easier to commit fraud, I would suggest, if you're dealing with a business that generates regularly, a lot of cash. Outside of that due diligence, really what we're talking about is doing your homework. Doing the work to not only assess risk, but also, keeping on top from a legal perspective, and indeed from all perspectives, as to what exactly is going on in your business, and both from a practical viewpoint and also from a legal viewpoint. 5th one here, always good to include this in any answer, communicate. Organizations should communicate between C-suite members and indeed down the ladder in relation to their views. Communication is key. Open communication is key, and it works both ways. C-suite should be communicating with lower levels, and there should be open avenues for lower levels, middle level management, etc., to communicate upwards in relation to perhaps concerns that they have in this area. Last one, a little bit like number 5, monitoring and review. We should always, as organizations, be monitoring our procedures and reviewing our procedures and updating them. The business world changes rapidly. We may need to change. We may need to change our processes, our procedures, our approach to risk assessment, our approach to due diligence, etc. Okay? So there's some ideas for an entity in terms of really how to deal with the areas of fraud and indeed corruption and bribery. Okay, so that concludes chapter 3. I hope that you found that of interest. Quite a long chapter for us, but as mentioned from the off, some important areas in there. They're all important, but certainly for me in this chapter, a firm grip on everything to do with ethics is essential for us, because, as mentioned, the technical side is not complex. It's not difficult to understand ethics, and indeed, over and above that, there aren't too many areas that we really need to understand. The code, ethical threats, approaches to dilemmas, etc. Not too many areas. Let's also have a good fix on what we mean by public interest, and indeed why that's important, and why responsible leadership is important too. Okay, so listen, thanks for listening. Good luck with your studies. Keep working hard.